welcome, welcome, welcome to another Token 24/9 in Dubai. Thank you very much, Andrew Work. He's definitely the best MC in the market. Great, you guys are very lucky to have him today.
This episode is powered by Xapo Bank. Experience the future of banking with Xapo Bank, the first fully licensed and regulated Bitcoin-enabled banking group. With Xapo Bank's all-in-one app, you can grow, transact, and secure your Bitcoin. Earn annual Bitcoin yield paid daily on your Bitcoin and US dollar savings, plus cashback on your card spending. Or instantly send and receive Bitcoin with the Lightning Network and seamlessly transact in USDC, USDT, US dollars, euros, and pounds. All this is backed by rock-solid security, including military-grade Swiss bunkers, cutting-edge digital protocols, and strict regulatory oversight. Sign up now at zapobank.com/capsule or check the link in the episode description. This episode is brought to you by ACX Compliance, your one-stop shop for all your crypto compliance needs in the UAE and beyond. From VARA licensing support to crypto compliance training and customized support, including crypto specialized transaction monitoring and SAR reporting filing support. ACX Compliance has over 200 crypto compliance professionals that are 100% trained in crypto and 100% focused on the crypto industry. If you're looking for a one-stop shop to really help you with all your crypto compliance needs, think ACX Compliance. Find out more at www.acxcompliance.com.
Guys, we're going to have a really fun time this morning, really talk about what's happening on the ETF flows, what's happening on the institutional side. And my goal today is very, very simple. Is to share with you the latest color and market intelligence we have, and then let you make your own decision on what the impact could be, not only on your business, but also on you personally as well, as we look into the space. And to do this, we have the dream team today. As was mentioned, we have Giovanni. We have, actually, let me start from that side. We have Evgeny Gaevoy, who's obviously the founder and CEO of Wintermute. One thing you may not know about Evgeny, he's a Warhammer fan. For all of those of you in the space, Evgeny, good to have you with us. Of course, then we have Roger Bayston from Franklin Templeton, who's the head of digital assets. Interesting fun fact about him, he's getting married in a couple weeks, and he's here with us in Dubai. And last but not least, Giovanni Vicioso, he's the executive director in equity and alternative products. And one fun fact about him, he used to be a Division I fencer in the US, and that's something I used to be fence as well back in my day. So maybe as after activity, yeah. We should do a little bout. So guys, we have a lot of topics to cover today, especially on the ETF side, on the institutional flow as well. But really, let's start with the ETF side. Roger, I'm going to start with you. Franklin Templeton was obviously very involved in the Bitcoin ETF approval in the US and the process there. Were you guys surprised by the flow that we have seen in the Bitcoin side, on the ETF side? And what is the type of investor you're seeing who's coming into these ETF products?
We were pleasantly surprised about the tremendous outcome of and success. I mean, look, ETFs have been around for a couple decades now, really. And was the biggest launch, the most successful launch in ETF history. And you just can't walk away from that massive event. I think it's going to be shifting the nature of all asset managers when they realize that there is demand, not just institutional demand, but off of wealth platforms and investment advisors and individuals, quite frankly. I think that's what we're seeing. We're seeing a lot of different investors coming into the spot Bitcoin ETFs in the US.
It's interesting. I think many people don't realize that it was the most successful ETF launch in history. I mean, and the fastest one even for one of the other ones to hit $10 billion right in assets, which is quite incredible on that. What has been the impact on the futures market? I know at CME you guys have the Bitcoin futures. What impact have you seen the ETF launch had on the futures market?
No, it's been a tremendous impact, and I think, you know, Roger, to your point, right, I think that the marketplace anticipated that the spot ETF in the US would be successful, but I don't think that the market anticipated that it would be as successful, right? But certainly what we've noticed, you know, historically is that futures do tend to move first. You know, the first ETF was the S&P Spider ETF, which launched, you know, in 1997, I believe, but that was 11 years after the first S&P futures contracts launched. You know, we saw like gold futures ETFs launch about 30 years after, say, futures existed. So futures tend to move first. And we certainly have been waiting for Bitcoin ETFs to launch. When we first introduced Bitcoin futures in December 2017, we always had in the back of our minds that futures would be, that ETFs would be a natural progression. It took a little bit longer than anticipated. I mean, the first ETF was a futures-based, first Bitcoin ETF was the ProShares futures-based ETF in the fall of 2021, and that product had at the time was the most successful, right? And really was dwarfed by the recent launch of the spot Bitcoin ETFs in the US. And what we've seen in terms of volume is that last year on Bitcoin futures, we averaged about 1.6 billion per day. In March, we averaged over $6 billion per day. And a lot of that is a result of liquidity providers, for example, using our futures to hedge activity on the ETFs. In fact, 6 out of the 10 new ETFs are benchmarked to the CME and Crypto Facilities Bitcoin reference rate New York. That's a reference rate that publishes at 4 p.m. New York time, and it coincides then with the NAV calculation for a lot of these ETFs. So we're seeing market participants leverage some of our mechanisms such as BTIC, Basis Traded Index Close, which allows market participants that ability to trade the futures contract relative to that net asset value calculation print at 4 p.m. New York. In fact, now in that 3 to 4 p.m. New York window, we're averaging over 1 billion in that hour alone, whereas last year, as I mentioned, we averaged 1.6 billion for the year. So we've really seen tremendous success, and I think that both products will grow together. I think March, collectively, the ETFs traded over $110 billion. Futures traded over $130 billion, so about 20% more. But across other markets, we tend to see that futures trade more than the ETFs, but the futures are the base for helping the ETFs grow. But it's really a symbiotic relationship, and as the ETFs grow, so will the futures and vice versa.
Yeah, but I mean, I think it's normal that even in traditional markets, right, the volumes of ETFs. But I mean, and I want to get your view of this, Evgeny, but on this point you mentioned, I mean, it's a bit ironic that you're talking about like in a 4 p.m. cutoff in crypto of an asset that is 24/7, and of course we have the perpetual swap market in crypto, which obviously is 24/7. Yes, there's an every 8-hour funding mechanism in place, but when you look at the CME type of futures 5 years down the line, how do you see that comparing to the whole perpetual swap crypto derivative market, which obviously also trades a couple $1 billion a day?
No, it's interesting. Certainly, the perpetual swaps, were an innovation in the industry. I think, BitMEX was the first to introduce such product. But I think that you really have different use cases for the perpetual swaps and futures, right? I'd say that the perpetual swap product is perhaps a little bit more retail focused, where we tend to see, in our markets, it's a regulated market, first of all. We do tend to see more institutional flow in our space. But when you look at the perpetual swaps, right, as you mentioned, Henri, there's the financing that's every 8 hours, right? And that's creates a uncertainty, because if you consider a proprietary firm that's providing liquidity, they don't know what that fixing is going to be in the next 8 hours, right? So they're kind of like running their own models, trying to guess what that financing is. When you consider a futures contract, there is a known end date. So for anybody providing liquidity, they know, for example, what the financing is to the end date of that particular futures contract, right? If you look at that implied financing, like recently, just after the launch of the spot ETFs, implied financing on some of the perpetuals was annualized about 60%. Now, if you think about anybody who's looking to get exposure through that product, at 60% annualized financing, that's really expensive. So I think, the use case for those products is not, say, a hodler, for example, but I think it's really somebody who's looking to benefit perhaps from the leverage and really looking to speculate and hoping to, do well, say, with that leverage that's offered.
But Evgeny, on this point, what's your view on it? Obviously, you guys are an OTC broker, you're market making, you're providing liquidity on, I presume, crypto derivatives as well. What's your view on the future of CME futures versus the whole perpetual swap market, especially that we're having a lot of the firms that are issuing these perps who are probably going to be regulated over the next couple of months and years?
Yeah, look, I mean, there are pros and cons to both products, and it's correct that retail is much more into perps, and institutional clients do prefer futures, primarily because there is a much greater predictability of funding due to effectively pay. but there are features of swaps which are, yeah, quite nice. Like they never expire, and yeah, in my previous life I was trading a lot of futures on clearing CME, and it's a fun process to roll them over every three months, but it's a bit annoying. And yeah, that's a feature of perpetual swaps, which is superior to a big degree. But yeah, the funding unpredictability, yeah, we'll see whether it will win hearts of institutional people in the end or not. I don't have a strong opinion on this.
How do you even see the crypto derivative space evolve? Do you think it's going to change radically over the next couple of years?
I want to believe that like some features of the crypto market will be adopted, namely, 24/7 trading would be really nice to see, because that's, for us crypto native people, it's very weird that exchanges close and open.
Yeah.
So I think that would be a pretty important feature for a lot of people, and I wonder when we will see it. Maybe it's a question more for you. Yeah.
Like, what's your view on that? I mean,
Yeah, so look, our products are available to trade Sunday evening, 6 p.m. New York to Friday evening, 5 p.m. New York. So effectively 23 hours a day, and we have a 1 hour break for maintenance between 5 and 6 every day. But to Evgeny's point, right, crypto is a 24/7 market. Now, we offer futures, we offer options on futures. What we're noticing with our options products, and we have daily, weekly options. So what we're noticing is a lot of market participants now trading our Monday expiring options contract to sort of like hedge some of that weekend risk. But I think longer term, it would behoove an exchange like CME to consider exploring opening our market 24/7. But in our case, we're not just a crypto exchange. We cover 6 other major asset classes. So when we look to make a move like that, we have to consider the impacts across these other 6 asset classes. But it is something that the exchange is exploring.
Interesting. I just want to ask maybe to you, Roger, because obviously when we look at the perp market, right, the crypto derivative market, a big chunk of it is outside of the US, right? Actually, technically, legally, many of these US firms are not allowed to trade on these big crypto derivative platforms. Even in the ETF space, right? There was recently, this week, Hong Kong approved not only the first Bitcoin spot ETF, but also the first Ethereum spot ETF. I think we all agree that the volumes and the activity we're going to see there is going to be a fraction of what happened in the US. But from your perspective, from an ETF perspective, what do you think the impact of this could be, of this Hong Kong approval, especially when you consider the Asian activity in broader crypto derivative markets?
Well, I think, again, the success of the spot Bitcoin ETF in the US market is going to have a large number of providers open their eyes and be able to look at, when I say providers, ETF issuers are going to be opening their eyes and looking at, these are ways now, these are additional ways where some of the other asset classes that we've had, underneath our umbrella in the public markets, this is a faster growing asset class, right? I mean, and if you're in the asset management business and you're earning advice fees for doing these things, you're going to be naturally looking at where business is growing. And whether it's the ETFs that are launching in Hong Kong or any other jurisdiction that we're likely to see across planet Earth, it's a big tipping point for the industry in general. The mainstream adoption of these really network economies, which is what Bitcoin represents. And, we're going to be talking about Bitcoin, but, next year this time you'll be talking about Ethereum, and you'll be talking about any other number of other projects that might be able to be delivered, whether it's in single asset ETFs or in multi-coin products. And I think that's where we have at Franklin Templeton a future vision of how do we take this environment where there's value and offer advice along tried and true things such as portfolio diversification, right? Where is value inside of some of these network economies that will accrue to holders of these assets? Can we get them in the type of form that delivers into where the assets are? That the broker-dealer accounts have trillions of dollars of assets in them. And so if we can get a mechanism toward that access, then I think we're in a whole new ballgame, quite frankly.
But how are you seeing the reaction of this market, right? So let's say the 401k market alone is a $6 trillion industry, right? When you guys are pitching this product to financial advisors, institutional investors, what's their reaction so far? Because obviously we hear a lot that there's a cooling off period before investment advisors can deal in institutional investors.
Yeah, clearly in the U.S. market, the 401k is different than somebody's, either an institutions or individuals, an account. There's a lot more regulation because of the fiduciary responsibilities that a company and the operators of that 401k plan have. I mean, we have seen, it's taken a long time for a lot of different innovation to happen in the 401k market specifically. But, you know, again, every journey starts with one step, and to the extent that we actually have these network economies, Bitcoin, Ethereum, others represented inside of a delivery mechanism that fits inside of that, then I think it's just a matter of time where the education comes forward. And we see more and more adoption in a lot of different places.
One last point on this, you know, what was interesting I found in the Hong Kong approval is they were doing an in-kind creation and redemption mechanism. And of course in the US, it's an in-cash mechanism. Were you surprised that Hong Kong took a step forward to do it in-kind? And do you expect the future, the if and when the ETF approval is going to happen, it's going to be cash or in-kind?
I don't think it really surprised us, particularly because as we've been in our journey in digital assets now for about 6 or 7 years, we came at it by looking at just how can we use blockchain technology in operating inside of what we do in the asset management business. We found a use case in the transfer agency responsibilities we have, record keeping. I mean, these blockchain networks are massive record keeping systems, quite frankly. And when we uncovered some of the efficiency gains of using these networked distributed ledger platforms versus our, you know, proprietary single database providers, it really gave us comfort that a lot of change is going to be coming, and we needed to keep doubling down and putting more resources. And what we're finding is there's regulators outside of the U.S. that are far more friendly. So it's not really surprising that Hong Kong is going to be taking another step forward beyond what the U.S. market has been doing.
Very interesting. Evgeny, I want to move it to you, talk about like the market participants, right? Let's talk about crypto for a second. Right now, when we look at crypto markets, there's really 2-3 exchanges that are the vast majority of the volumes on a daily basis. From a intermediate and from a personal perspective, when you look at 5 years down the line, do you believe we're going to be in the same kind of market where there's 1 or 2 players that dominate? Will it be the same players, or you think the landscape may change from a centralized exchange perspective?
Yeah, I think like the default view is, yeah, we should see something like some kind of like repetition of what we see in traditional finance. So there probably will be a few big regional players and maybe 1 or 2 global players, just like we see, I don't know, derivative space currently dominated by CME and Eurex, for example, globally. So it would be kind of a default view to expect to arrive here, but I'm kind of hopeful that we'll see a bit more fractured market, so quite a few more exchanges, especially on DeFi side, and a lot more competition. That's kind of a hope for us as well, and that's what we are kind of building towards as well.
And if I may add to that, like if you think of what's happening with the ETFs, right, and the success that we spoke about earlier, but do you think, like, for example, could there be more, say, people using the ETF for access versus folk looking to trade on centralized exchanges, right? So that remains to be seen. You know, certainly I think we're in very early days, right? You know, already the ETFs, I think over like 30 billion or so, like easily,
incredible.
Right?
Yeah.
Which is phenomenal, but I think that we're only seeing like a fraction of the participants in that market yet. You know, you don't have the wirehouses fully there yet. You don't have all the registered investment advisors there. So, you know, that particular market could be huge, and it'll be interesting to see how that impacts some of the centralized exchanges going forward. But I would anticipate that there would be perhaps some consolidation amongst the centralized exchanges, right?
Because you're right. Technically, if you argue, if I'm a U.S. retail investor right now, ironically, it may be cheaper for me to go buy an ETF than go open an account on a centralized exchange and trade along with the counterparty risk and this and that and the fiat on and off ramps. I mean, it's very ironic on that perspective, from a U.S. side, right?
Yeah, EasyBC, which is our Bitcoin offering, is free.
Yeah, there you go.
What's cheaper than free? Right.
I mean, even for you guys, it must be kind of a loss leader. I mean, there's a cost as a business to come in and offer the service for some time.
It is,
to,
but
to gather the AUM. There's a race to AUM in a way.
yeah, I mean, Franklin Templeton has been in the asset management business, and I think we're celebrating our 76th year.
Yeah.
You know, we're in a business of trust. We understand that intimately, and to build that trust, once you gain that trust, you can keep it for a long period of time as long as you're doing right by customers. And there's no doubt that where it currently stands in the retail marketplace in the U.S., you have the wirehouses, the wealth management platforms are doing their due diligence to select, you know, who the limited number of providers might be. They're allowing their platforms to be able for you to purchase it. It's, you know, self-directed. They're not offering any discretionary advice. That's the tipping point. When there's more realization that these networks are hugely powerful rails off of which the data economy is going to be moving going forward, it's that big picture thematic story. When there's more understanding about that, there will be much more adoption, and we're likely to see, you know, probably a lot higher price action, quite frankly.
And I think that it's also like a function of like where you are, right? Because certainly the ETF, you know, you hear not your keys, not your crypto, right? And if you have the ETF, you're really getting cash exposure to you know, the price of Bitcoin. But I do anticipate that there's other economies, for example, or other reasons why people may actually want to hold the coin. Right, yeah. You can't trade the ETF on weekends. You know, we spoke about weekend trading before, right? Of course. But you also can't take that ETF and transfer it to somebody else if you want to, you know, exchange. So I think that there are different like users, and you know, the user base maybe in developed countries may get their exposure through a cash-based product. But I think of other like countries where there may be a better use case for something like Bitcoin.
But then you can argue the use case is different, right? For somebody who's in Turkey, Nigeria, and Argentina, where they want to hedge against inflation or whatever, even stable coins, I would argue the purpose is different. But there's a big chunk of the market who are buying. My mom in Montreal, Canada, when she wants to buy Bitcoin, because, you know, she wants to understand what I do in life, I think that for her, there's a perfect use case where ETF could be better than going on a centralized exchange, understanding what a Ethereum network is or Tron network is, and so on and so forth, right? I mean,
yeah, 100%.
And that market is quite big. Actually, it brings a good point because I'll get your point of view on this, Evgeny. What I find very interesting right now in markets, in crypto, is that there's a massive disconnect, right? I mean, for example, the rate of borrow, if you say you want to trade on crypto exchanges, you want to trade perpetual swaps, the borrow of USDT, for example, is extremely high. And during last bull market last month, I mean, retail was paying over 50, 100% in some cases. But if you go in the traditional space, you can obviously see the cost of borrowing dollars is significantly lower. What do you think is going to have this like discrepancy change? And from a trading perspective, what do you think is going to take for this arbitrage to disappear in a way?
I mean, the main challenge is there are very few players who are present, who are basically trading on CME and on Binance and on DeFi, and yeah, the funding rates are pretty different on all three. There are very few players, like us is one of those few players who actually operates in everywhere, and you ultimately need to make a choice where to deploy your capital. And as crypto grows and as we see more players entering the space, I don't know, Binance is closed for a lot of US prop trading firms, for example, at the moment. So it already makes it a lot harder to close this funding gap. Yeah. So we'll see. Like it will take a lot more market participants entering to put those rates, to basically normalize those rates between different parts of the ecosystem.
And where are you seeing those market participants come from, actually? When you look at the global landscape and you look at the next couple of years, how do you see this market participant change, especially where people are coming from?
It's a big function of, to a big degree, it's a function of regulators as well. So I think the market participants coming from jurisdictions with more liberal regulators, it will be basically the first wave. Once US regulators become a bit more liberal in US, and we'll see how, I don't know, elections this year go, for example, I think that should unlock a lot more, actually.
Because I would argue, in a certain extent, if tomorrow morning you're launching a brand new crypto company, I mean, no disrespect, but I think you'd be a bit of an idiot to do this in the US, right? There's so many jurisdictions now where you have the regulatory comfort, the clarity, and so on and so forth, and the flexibility to trade the exchanges you want. You know, I just find it's very interesting, this dynamic we're seeing on that perspective. For products like the ETF, it's a no-brainer. For the CME, of course, it is what it is. But on the trading side, I think there's this massive disadvantage if you're set up in the US, actually.
No, it is, yeah. And we've seen a lot of competitors basically rearranging their operations after the latest like Binance action, action, for example, yeah.
So let me talk about the future as well, about DeFi, right? We talked about it a couple of minutes ago. You talked about value creation, about the new economy. When you see the future of DeFi, let's say in 5 years, we have this conference in 2029 here in Dubai. How do you see the world of DeFi would have evolved by then? And how do you think it will have competed with the centralized exchange as well as traditional market participants?
It's a function of two things. So first, whether tech will work, tech will scale effectively for those decentralized platforms. Like
DEX will scale.
For DEXs, yeah. So I don't know, you see DYDX before, for example, now, which is much more fully decentralized compared to anyone else.
Yeah.
But we need to battle test it. We need to see how much throughput it can handle. We need to see, if it can even do a fraction of what CME can handle, for example, on the throughput side of things. And the second factor is, again, regulation. We see a lot of hostile regulations in general across the world, like not all the countries, but a lot of key countries are pretty hostile, especially when it comes to self-custody, for example. And if you cannot self-custody, it basically kills the whole point behind DEXs. Like then we stick with Binance and CME and Coinbase,
Yeah, it doesn't work. That's why it's going to be interesting to see what happens in the US on that side. How do you think DeFi could affect your businesses? Let's say on the exchange side. How are you guys looking at the potential risk, not risk, let's say competition of DeFi down the line?
Yeah, no, great question. I think when you look at just the crypto space, right, it's relatively new. I mean, Bitcoin's only been around for about 16 years or so, right? So a lot of these platforms, there's a lot of them, right? But they're not time tested. You know, reliability, is could still be an issue, right? Trust may be an issue, and I think in order to get TradFi institutions to adapt some of these protocols, some of those factors need to be there, and I also think that you need, say, the point that you made earlier, that regulatory clarity, needs to be there, right? And when you think of something like Bitcoin, which is global, right, and grew up almost by word of mouth initially, right? On the regulatory front, I kind of feel that we also need to be global, right? Where I think that the regulators need to get together globally so that you don't have, say, this regulatory arbitrage, right?
I actually feel pretty good about. I mean, I know there's a lot of pessimism about regulators and being a little overbearing and the like, but for sure, I think the focus from the regulators, at least our communications with regulators, and we've been shepherding several products through the US regulators and the Luxembourg regulators. What you find is that the focus has been on the asset themselves. What is Bitcoin? What are cryptocurrencies? What do they do? But after some time and education and collaboration, beginning to understand what the networks are capable of doing and how they can be an improvement over the existing infrastructure, I think you're going to see in the next couple of years a bigger realization about how the regulators can begin to do their job easier, because a lot of this activity is riding on these public blockchain utilities, quite frankly. I mean, several years ago when we started having conversations with the SEC about our project Benji, our tokenized money fund project, which is available in the US and we hope soon globally. The conversations that we were having with them was, look, if these transaction records take place on these public blockchains with the right tool sets, and we know the SEC has the right surveillance tool sets. Correct. With the right tool sets and people, they can observe the movement of all these activities a lot easier. And so it benefits them as a stakeholder.
Yeah.
There's more efficiencies for the shareholders of the product so they can earn more capital in return. It's easier and cheaper for the asset manager to operate as well. So I'm actually a lot more positive about that. Maybe because, you know, I'm now on practically my 50th conversation with the SEC about projects, and I see the changing nature of their approach of let's understand what these technologies deliver for us rather than focusing on the cryptocurrency itself and the volatility of it.
And I think that's interesting because when you talk, let's say where we're in Dubai right now, here the VARA, the crypto regulator, they regulate the activity. They actually don't regulate the assets, which I think is a smart way because then you're an asset manager, you're a broker dealer, and that's how they look at it. And by the way, every licensed firm here, every week they do weekly reporting of your wallet addresses. And of course, the regulators are running his on-chain analytics on the back end. So they have obviously very good visibility. It's a bit, it's way more secure, I would argue, from a risk management perspective than the old school filing schedules that we do on the SEC website.
And let's be clear, the regulators are in communication with each other.
Yeah.
Right, it is a community of securities and exchange-related regulators across the planet. And if one of them is giving blessing, it helps when you're having that conversation with another one.
Yeah, which is hopefully a good thing, you know. But also, you know, you mentioned about for TradFi firms in the institutional setup, right? I mean, I'd say while I was preparing for this panel, I was pleasantly surprised to see that Franklin Templeton offers like these staking services. You guys are on various nodes. How was it to try to bring crypto within a 75-year-old Franklin Templeton organization where there's obviously a lot of legacy and frankly, I'm sure, legacy mindset as well in some instances?
Yeah. Well, I think it helps if you have a partner right at the top of the firm.
Yeah.
So Jenny Johnson, the CEO of Franklin Templeton, is a risk taker.
Yeah.
And she understands the nature. She spent a lot of years running the operations of Franklin Templeton by and large, and so she began to understand the technologies, probably far more than some other industry leaders have been. So that's key right there, is that you have a lot of access right at the top with a belief system there. And then I think the other component is you just have to have a spirit of R&D.
Yeah.
Right? You have to try things in order to get outcomes, by and large. Not enough of that happens, I think, in the asset management business. Everybody looks at each other. What did you do? Oh, you raised money this way. I could do that too. But you have to be stepping forward. And it's an entirely new community and user base that Franklin Templeton is excited to engage in. A couple of weeks ago, when the spot Bitcoin ETFs came out, we changed our corporate logo to include the laser eyes on Ben Franklin. It was like 5 million views globally for doing that, right? That's saying that there's a different community of engagement that recognizes that these blockchain environments are creating new types of assets. I've always had the idea that if you can expand the opportunity set for your clients, you might have an opportunity to raise that efficient frontier. Rather than just only increasing the risk, you might be able to access more outcomes. And I think that's kind of the vision that we have. Yeah,
it's very interesting actually how the top leadership matters. I mean, even some of your peers, like to look at Vanguard, for example, when the top is not bought in, forget about the rest. I want to ask you one quick question before we move to the 5-round question. Is about talent, right? So it's very good you guys doing the laser eyes and so on and so forth. You know, I'm a university professor. I've been teaching crypto since 2015, right? And every year, many of my students want to join the crypto industry. And they always ask me 2 questions. They're like, should I go work for a crypto firm? Should I work for a TradFi firm who's getting into crypto? How do you convince somebody? Actually, let me start from your side, Evgeny. Like, when you're getting talent, first of all, where are you getting talent? And then I want to hear from your side, guys, on a TradFi side, how are you able to convince people to work for your organizations when they have the choice to go work for, let's say, crypto firm, to do crypto? Evgeny, I'll start from you.
Yeah, I think the key thing we learned, because we're operating for 7 years now, the key thing we learned is it's much more important to get people who are bought into the mission of crypto, bought into the whole ecosystem, and not just here because they're mercenary, not just here because they're, I don't know, tourists, because it's a bull market and I can make a lot of money. And we've been traditionally growing slowly but steadily. We've been basically adding people every year since 2018, even in the bear markets. And it's been quite important for us to get the right alignment, the right culture. And it's really hard because we are competing with HFTs, we are competing with fintechs, we are competing with crypto protocols. it's tough.
So what are you looking for when you're hiring somebody? What is the one thing you're looking for?
Basically culture alignment, which in our case is, right work ethic, crazy working hours.
Yeah. You need to be a bit crazy to work in crypto, huh? That's
this 24/7 aspect
Yeah.
is real. I mean, not necessarily like 24, but like 7 days a week aspect is real. So yeah.
Roger, what have you found works best to hire people to come on
Well, I think I think not enough of this is done. Giving permission to some of your own employees to explore. I mean, when you invest over decades and you create wisdom among your staff and you give them some latitude to begin to apply that wisdom somewhere new, it's super engaging for them, right? They want to do what they want to be with you for the long term, and you gain from all of that industry wisdom that's come across different cycles and seen things. Giving people inside of your own organization more ability, more permissions to do things has been really important. Some of our very best, most talented employees aren't the ones that we've had to go recruit from outside. It's just taking people that have been long-standing great employees who see a vision for something new and are going to apply all their experience toward it.
And often they could be some of the most junior employees as well, which is interesting. On your side, Giovanni, how are you guys getting able to hire people when technically somebody could go to a crypto exchange and
Yeah, so I mean, CME is a 180-year-old institution, right? But we've been innovating for those 180 years, right? When you look at the crypto space itself, I mean, we've been in the space now since 2015, initially launching reference rates on Bitcoin, providing price transparency. We now have reference rates and real-time indices covering over 20 different coins and tokens. Obviously, we have futures and options on futures on both Bitcoin and Ether. But like Roger mentioned, you know, in terms of talent, you know, some of our talent, we're a relatively small organization. I think we've got maybe 3,500 employees covering 6 different asset classes, 7 if you count crypto. And we too also promote say from within and train folk from within. But I recently added somebody on my team, and I could share with you that we had for that one position, like almost immediately, like over 1,000 applications for that one role.
Here we go.
And the those applications came not just they came from some TradFi participants, but we also saw folk that are working say in the crypto space and are looking, say, to explore, opportunities within, a TradFi firm that's expanding, say, in this area. So it's been super exciting. But what I find about the space, though, is that it's just very collaborative, right? I find that we compete, but we're also all interested in really growing this space.
Which is the beauty of, I think, the crypto industry on that side.
Yeah.
So guys, we have about 2 minutes left. My Bell is with me, my best friend, always with us. So guys, I'm gonna ask you quick questions, and I need 1 or 2 word answers, right? And the Bell is here to keep us honest. I'm gonna start with you, Giovanni, and we're gonna move on, Roger, and then Evgeny. You guys are ready?
Unscripted.
Here we go. What is the one development in crypto you are the most excited for the next 5 years?
I think tokenization. Tokenization.
Tokenization. Roger.
Yeah, tokenization.
Really? RWA, interesting. What is the one development in crypto you're the most excited about?
DEXs.
DEXs, decentralized finance. I'm starting from you, Evgeny. What is the one biggest risk we face as a crypto ecosystem today?
Regulation.
Regulation, interesting. Roger, what's the biggest risk we're facing? We should all be worried in the room.
I think it's education.
Interesting.
Yeah, lack of regulation.
Regulation as well. I'm starting from you on this side, Giovanni. If you could hold one cryptocurrency for the next 10 years, you're not allowed to sell it. What do you hold?
I like Ether.
Ethereum is a great project.
I'll go with the spicy one, Doge.
Dogecoin, here we go. My God. So this is a tricky one. I'm starting with you, Evgeny. If you could launch a new crypto business, a new crypto startup, and you can choose any crypto CEO entrepreneur as your co-founder, who would you choose?
Oh my God. Any CEO, co-founder?
Any CEO, entrepreneur in the crypto space.
I'll go with, you guys are going to have him as a speaker as well, I think, a bit later today. Tristan from Backpack. Tristan from Backpack.
Tristan from Backpack. Interesting. Yeah, firm was actually based here. There you go, Roger.
I'm not going to, I have too many friends in the industry to vote on that one.
Same
Giovanni.
answer. I have to go with my current boss, Tim McCourt, who
Here
I
we
think
go.
has been great for me.
Very, very diplomatically correct here. This is a tricky one. I'm starting from you, Evgeny. You could have lunch with Gary Gensler. You're having lunch with Gary Gensler. What is the one thing you tell him?
Yeah, I'll just ask him when they start in specie creations for Bitcoin ETFs.
Species creation.
That's ridiculous.
Roger, where you tell Gary Gensler for lunch?
No, I'm not going that one either.
Giovanni.
I might have to say goodbye.
Quick one, two more left. I'm starting from you. If you're not in the crypto industry, what would you be doing?
Oh boy, innovating.
Innovation.
Coaching basketball.
Coaching basketball. Here we go. Well, after you got married.
Gaming, I guess.
Gaming.
Yeah.
Here we go. And the Warhammer fan comes out. And guys, the last question to finish off this panel, the traditional question, whoever goes on stage with me, I'm starting from you, Evgeny. If you could have lunch or dinner 1% dead or alive, you could have lunch or dinner with 1% dead or alive, who would you have lunch or dinner with?
Damn it. Really hard one. Can I go last and think a bit more?
Roger.
Abraham Lincoln.
Abraham Lincoln. Here we go. Very patriotic.
For me, I'd have to say my father.
Your father. Oh my God. What a great way to end this panel. Guys, thank you very much. Nice. It was great seeing you. A big hand of applause for the panel. Thank you very much, guys. Enjoy the rest of the day.
Thank you very much to our panel. And Henri Arslanian. Henri, hold up just a second. I'll let the rest of you go, please. Giovanni, thank you so much for joining us. Grazie, grazie. Roger, thank you so much. You good? And I have to admit, ladies and gentlemen, I am taking a moment to pause before I let Henri Arslanian go, not only so I can flash his book around. Are you going to be available for signatures?
Yeah, I'm here. I'm here early today, tomorrow.
Great. And during the session, I got a phone call from the Dubai regulator. And the Dubai regulator says, Andrew, don't forget to mention that Henri's $150 million market-neutral crypto hedge fund has been approved by VARA. They said, don't forget to mention. So Henri, I didn't want to miss that out because we are here in Dubai.
Amazing.
Right.
Thank you very much,
stuff,
guys.
Henri Arslanian.